Hey guys, today I will talk about the US dollar versus the Japanese yen because the bias is still bullish, guys, and the temporary retreats or a value breakout above the higher high could bring us new long opportunity. So I will talk about an upside scenario, about a fresh upside scenario, upside continuation. So first of all, here is the risk disclaimer. Please read it. You can send an email to support if you have questions. It's important to understand the risks and that the past performance is not a reliable indicator of future performance. Thank you, guys. So you can also subscribe to our YouTube channel. You can learn a lot from our videos, analysis, webinars, tutorials. So US dollar, Japanese yen. Right now it has managed to jump and stabilize above 144.99, 145 psychological level. Okay, here massive sell-off in September, only because if you remember, the BOJ and the Japanese government intervened into the forex market, foreign exchange market. That's why we had this this sell-off. The BOJ decided to buy, to buy Japanese yen for US dollar, or to sell US dollar for Japanese yen. So that's why we had this massive sell-off, but it was only a temporary sell-off, and the bias remains bullish, guys, because as you already know, the Federal Reserve increased the federal funds rate in the last monetary policy meetings, and it is expected to continue hiking rates in the next monetary policy meetings. So and on the other hand, the BOJ, the Bank of Japan, left its monetary policy unchanged. So it's interest rate is still in the negative territory, so the currency pair remains bullish right now. As long as it stays above this uptrend line here, okay, the bias is still bullish. Right now it has reached this inside sliding line, because we have two inside the sliding lines here, a downside in sliding line and an upside inside the sliding line here. Which acts as resistance only because here it has rallied before this retreat, so that's why I'm using this level. You can see that the price registered false breakouts above this level in the past. So right now, personally, I would like to see the 145 and 52 retest, okay, retest before it will extend its upwards movements, because we had this this former high here as resistance. Right now resistance turned into a support. We also have this this uptrend line here. We have a confluence area here, the intersection between these two support levels, downside obstacles. So moving sideways here in the short term and testing and retesting these levels, registering only false breakdown, sideways movement, a new higher high here, value breakout above 145.90. This key level, higher high, could activate potential upwards movement. So this is my opinion here about the US dollar versus the Japanese yen. And if we'll have a new higher high, a value breakout, sideways movement, test, retest, a value breakout here could signal a potential further growth. And personally, maybe I will use the upper medium line of descending pitchfork as a potential upside target, upside obstacle, if the price continues to grow. And in my opinion, only dropping here, making a value breakdown below these levels, a new lower low, could signal a potential downside movement. But right now this scenario is less likely to happen. The dollar index is still bullish, so this pair also is still bullish. So that's why personally I'm still looking only for potential long opportunities. Okay, so don't forget, guys, that tomorrow we'll have the PPI, FOMC meeting minutes as high impact events, and also on Thursday, consumer price index, the US inflation, and the Friday retail sales from the United States. So you have to be careful, because the fundamentals will move the markets as well, will shake the markets, will have a big impact. So you have to be careful, okay, because the fundamentals could change the sentiment. Okay, thank you, guys. Learn to trade forex signals. If you want to join the VIP group, or you can access the link posted right below this video. Thank you, guys. Bye bye.